Bitcoin is currently at its last line of support, and as a result, many altcoins are bleeding. So in today's show, we are going to explore what is potentially next for crypto and Bitcoin, as well as going over some of the key macro data that is influencing the market and some of the news that we've gotten over the last 24 hours, which is affecting the markets. There's a lot to talk about today, and we also have a very special guest who is a trader that is going to help us dissect this market and run through where we currently sit and give some trade options for you guys, because it is crazy times right now. It is presenting some opportunities, but at the same time, you do have to be very careful when the market is behaving in this manner. So without further ado, let's get into some of the news that has happened over the last couple of days and kind of dissect exactly why we are getting this drop, and then work out how far this drop could go and how we should play it as investors and traders. The first thing is that 2 days ago, or yesterday, depending on what time zone you're in, Jerome Powell came out and said that the ultimate level of interest rates is likely to be higher than previously anticipated. And as a response, we saw treasury yields shoot up, behaving almost like shitcoins, hitting 5% on the 2-year treasury yield. Now, obviously, as a result of bonds increasing, this does put more pressure on risk assets, because risk assets, when you have other alternatives that are paying super high yield, tend to not perform as well, as there's less of an incentive to park your money in riskier sectors, especially like the DeFi sector. This was a major point I made yesterday. The DeFi sector does struggle in a high interest rate environment when bond yields are super high, because I mean, staking your ETH or staking your Bitcoin or USDC in a DeFi pool looks like comparatively less attractive in this environment. So I do think this is putting some pressures on the market. And obviously, like Bitcoin as an asset that thrives in a low interest rate environment, it doesn't do so well alongside other risk assets in times when inflation is, or at least interest rates are rapidly rising in order to combat inflation. So the number one thing in terms of like how we approach this market as investors is work out what is the potential pace of rate hikes going to be over the next few months, and is the Fed going to react more hawkishly or more dovishly to what the market expects? Because what the market prices in is based on its outlook at the moment, and that is often a reflection of what it is anticipating over the next few months. And we can see exactly the probabilities for the meetings, the FOMC meetings, over the next few months, which dictates exactly how much and how severely they're going to be hiking rates. So we can see that the odds of a 50 basis point rate hike this month just hit a new high of 75%. So just a few weeks ago, the chances of the next FOMC meeting resulting in a 50 BPS hike was like, I think, less than 10%. Now it's all the way up to 75%. So after what Jerome Powell said in the latest conference, the market is now starting to anticipate he's actually going to hike a little bit further than we thought. And this is something that Ran on the main show has been like preaching for quite some time, that it's likely we get another 50 BPS hike. And I think that is what's going to play out. Obviously, this is dependent on CPI data coming out on Tuesday. It's also dependent on PPI data as well. But that is currently what the market is expecting. And that is why we have had a pullback in equities and Bitcoin as well. But the odds, and this is probably the more shocking thing, the odds of the 250 basis point rate hikes are now 20%. So the markets now see a 36% chance that rates go to 5.75% or higher. And now for the first time in a while, there is a genuine chance that we actually do get a 600 basis point cash rate. And I mean, that's kind of crazy saying this, because just a couple months ago, the chances of this happening were like 5 or 6%. Now we're seeing a 20% chance that we actually do get a 600 BPS rate, which is pretty insane. And obviously risk isn't reacting well to this. And that's just off the back of Jerome Powell's, pretty consistently hawkish stance, as well as some of the inflation data that's came out slightly hotter than expected in recent times. We had CPI coming in a little bit hotter than expectations. We had PCE coming in a little bit hotter than expectations. So that really puts the onus on this data coming out on Tuesday. And we also have data tomorrow and later into next week. And I'll give you my calendar in a second for when that data is coming out. It puts the pressure on that data, because that will dictate exactly kind of how the Fed moves. So this is the meeting probabilities currently, something to keep your eye on how these rates shift. Right now, we're in such a macro-driven environment. Honestly, I'd love to sit back and just trade altcoins and degen into stuff. But unfortunately, at least for the time being, macro is still the biggest story, even bigger than the SEC headwinds, even bigger than Mt. Gox, even bigger than Shanghai. Macro is really the driver behind the market at the moment. And we could see that reflected on the charts, which we're going to get into in a second. Powell actually did speak with Congress again yesterday, though. He said we have important data coming up, including the jobs report on Friday and both CPI and PPI inflation next week. So he also alluded to the fact that this data is super important and is something the Fed is keeping a close eye on. Powell said that no decisions can be made without this data, which makes this what 𝗵𝗍𝗫 said is the most important data of all time. But this also may be sarcasm, because it seems like every single week we get the most important data of all time. Like, given how macro driven this market is right now, every week there's big dates, and almost every week you have to be paying attention. It really pays to pay attention in this environment, because there are obviously opportunities if things come in slightly more lenient, and if things come in slightly more aggressive, then of course there are either opportunities to go short, or it also creates a chance to like de-risk a little bit. But you really do have to pay attention in this market environment, because especially if you're in shorter term positions, like short to mid-term altcoin trades, or just generally have like a riskier portfolio construction, it's important to like just stay aware of what's going on, so you can like adequately de-risk, adequately take advantage of opportunities, and also just, I guess, have your finger on the pulse a little bit more. Of course, you can have like a more passive approach, which is like more DCAing, more long-term positions, but even then I think it's still important to like stay in touch with what's happening, because even like I believe that the DCA approach is most effective when it's a volatile approach. And what I mean by that is being able to like manually adjust over time the severity, frequency, amount, aggressiveness of your DCAs, instead of just having like a linear plan, which I don't think necessarily is like optimal. But it depends if you're optimizing for like capital efficiency, or if you're optimizing for just like peace of mind. It really depends on how active you are in the market. So in terms of the most important dates over the next few days, because we did talk about the fact that there are some really, really important dates, I would say, look, we have jobless claims, we have an employment report. So like employment data is very important, because the Fed doesn't want to see a weak labor market. If the Fed sees a weak labor market, then they're essentially going to have to they're going to be forced into stopping hiking as aggressively, because that's just going to put more pressure on companies that hire people. We as investors, I guess it's a situation where bad news is good news. So we as investors probably do want to see a weak labor market. And I'm not saying that as like a, from a personal perspective, because we don't want unemployment, but from a like pure market perspective, considering the market will probably anticipate the Fed putting its foot off the pedal if there is bad employment data. The market probably does want, from like a bullish bias perspective, data to be bad. So this is something to keep our eye on. Of course, like it's less about the data itself and more about the trend. So how the data is trending. Strong labor market means the Fed probably has more license to keep hiking without affecting jobs. It kind of probably gives them a bit more runway in terms of the rate hikes. That's what strong data does. Weak data does the opposite. So that's something to keep your eye on. Obviously, core CPI is the real main thing, though, to keep your eye on, because this is going to tell us where inflation's headed. I've seen a few estimates. I've seen the 5.4 estimate being chucked around. I've seen a 5.5 estimate year on year being chucked around, I think, by Bloomberg. So and Cleveland was 5.4. So, I mean, it's roughly in that like mid fives range. Let's see how high it is. If it's obviously higher than 5.5, I think the market's going to react badly. Maybe pricing in a bad situation already. So that's something we have to keep in mind. So maybe it would take like a 0.2 over estimates to like really spook markets. And obviously if it comes in under like low fives, that's going to be like quite bullish. I think the market reacts really, really strongly because maybe like we actually end up getting a 25 BPS if that data's strong. I do think you also have to think probabilistically, which means like going in line with what is the most probable scenario instead of thinking in absolutes. And if we are thinking probabilistically, then we probably are getting a 50 BPS and the data probably is around like the mid fives. So that's just something to obviously really keep your eye on. That's the Tuesday CPI data. I'll also be doing a spaces on that day. Ran will also be doing probably like a live stream of the data on that day. So we're going to keep you updated with what we're doing throughout the entirety of early next week. So make sure you click that notification bell if you haven't already and subscribe if you're not subscribed to make sure you stay up to date in this market because it is pretty volatile. Then we also have retail sales on the Wednesday and then, you know, more kind of reporting coming out later. Actually pretty like important week next week for markets. But once again, we do say that every week. So how did the dollar and how did the stock market respond to some of this stir about what 𝗪𝗏𝗃𝗫 said a couple days ago. Well, the first thing we got is the dollar actually shoot through one of its major resistances at 104. It did push up and get rejected on the shorter time frames at the 105. So this is something that I'm really keeping my eye on. If we get like a huge break of the 105, this is obviously quite bearish for market. So I am keeping my eye on how the dollar reacts here. Jose in the comments says short squeeze. Look, to be honest with you, I'm going to show the Bitcoin chart in a second. To be honest, I do think at some point we do get a squeeze because things have like come down pretty rapidly and like quite quickly. And I think like Bitcoin never operates like in one like linear fashion. We do get bounces along the way. So although I think there is more downside this year, at some point, of course, like the probability of us getting like a bounce in the shorter term is actually, pretty high in my opinion. Like we definitely could bounce, especially if we touch this 21.5 level, like that's key support. Definitely could get a bounce there. And even like right now, I think we can also get a bounce to push up, capture some liquidity in this 22.4 area, like around this area before maybe another rejection, or you never know. Like if we get positive data, potentially we could flip that support back into the bullish scenario. Once again, like not necessarily what I think is going to happen, just outlining some trade scenarios for you. But definitely like a small push up here in the shorter term does make some sense. So I'm not like all doom and gloom, like we're going to crash to 20K right now. I think there's definitely some validity in the fact, we do still have to test some levels and, make, bearish confirmation before we go much, much lower. So that is potential for that to happen. And basically a short squeeze, which what Jose was talking about, is like if the market like keeps piling on shorts, gets really aggressive with the short side, we're going to see funding rates for shorts start to really pile up, and we're going to get an indicator when that's the case. Then of course at some point like you could get squeezed on a move up, because that could liquidate a lot of people that are kind of late shorters. We often see this a lot in the market where late shorts and late longs get wrecked. I think right now it is kind of a bit of a late short, considering we've dropped all the way from 23.7 down to the current levels, which is like a 9% drop in Bitcoin. And obviously altcoins, a lot of them have gotten smashed. Like they're down 20-30% this week, especially some of the riskier coins. So yeah, I think at some point short squeeze is possible, but we do have a trader coming on in a few minutes. It's going to give us a little bit more clarity over this, because you guys know I'm not a full-time professional trader. I don't claim to be. I kind of just go off the levels I see, go off my intuition, and use that knowledge to kind of tie into making better investment decisions. I'm not like a professional day trader or anything. So the whole point of this show is something I've been trying to do is get more guests on the show, get more alpha on the show. So now any given show that you watch from me could have a random guest now. So I'm going to start having a lot of surprise guests on the shows to give their alpha, because I understand my limitations, and I want to facilitate this as a platform that can help share alpha of not just big accounts, but also small accounts, and give them a platform to share their knowledge as well. So that's something I'm going to be doing in my shows now during my weekly live stream. So make sure you don't miss a show, because there could be some hidden gems in these shows. I really want to up the alpha per minute on the shows, which I think is high, but could be a lot higher. So one more thing I want to touch on before we get into that is the news we've had on a regulatory / SEC court proceedings front, because we did have actually some massive news. The first thing we had is the Voyager news. So Binance actually agreed to purchase Voyager for a minimum of $1 billion. So they're going to be purchasing Voyager assets. The SEC decided or tried to overturn this, but it was unsuccessful because essentially the lender Voyager was approved by a bankruptcy judge to proceed with the sale of assets to Binance. So that is actually going ahead. That is very good for Voyager creditors, because they will be getting roughly 70% back of their initial credit. So 70% is pretty decent, considering a lot of them were facing what they thought was funds that were just lost forever. So I think that's pretty good for those people, and for the creditors could be better. Obviously, it's never good when you lose money in one of these centralized entities, as we saw last year, but that is some positive news for the Voyager guys. The other bit of positive news, and this could actually be a huge net positive long term. In the short term, I've got some thoughts on how this could affect the market, but long term, I think the Bitcoin spot ETF is a huge potential catalyst to onboard millions of new retail and institutional investors into crypto. So that has gotten its chances slightly buoyed over the last couple of days, as they appeared to win the opening salvo in the court. So the judges basically sided with Grayscale, at least verbally sided with Grayscale, saying that the SEC's arguments didn't make much sense, and that Grayscale essentially had like a pretty decent case, and all judges are expected to be aligned with Grayscale at the current moment. Now, this did result in a couple things. The first thing it resulted in was the GBTC discount absolutely collapsing. So we know GBTC, it's like basically like a futures Bitcoin ETF. It traded at a huge discount because essentially there was no like one-to-one redemption mechanism to get your Bitcoin back from the ETF. So there was a massive discount and like probably an eventual arbitrage that now we're seeing play out, because the discount is collapsing, now sitting around like 30% from what was, I think, 45 to 50% like a few weeks ago. So basically people are expecting, or the market now is pricing in the higher likelihood of a Bitcoin spot ETF after we got this Grayscale news, which means the path to GBTC futures Bitcoin holders actually exchanging their assets for the NAV, net asset value, is like much higher. So that's obviously going to be a positive thing, because I mean, for all those holders, they're finally going to make their money back if this does get approved. But it can also be a negative thing, which is my point number 2, because although a Bitcoin spot ETF is very, very good long term for crypto adoption, I think the negative thing is that there's billions of dollars held in GBTC currently that could be unlocked, because there's people that were down like 40, 50% that are now going to like take the opportunity to redeem their Bitcoin and get full value for their Bitcoin. So those people are going to potentially sell it as soon as they like receive their Bitcoin. So this could add more supply pressures onto the market, like in line with what we're seeing with the Mt. Gox creditors starting to receive payments. I think tomorrow was the rumored date, but I think it'll be a little bit later than that. But yeah, we could see potentially Mt. Gox and Grayscale hitting the market at once. The one thing I will say is this Grayscale thing is going to take a long time to play out. This is simply the opening, like the opening argument, essentially. There's going to be many, many more months of this. Final decision, you know how slow the courts are, could take like 5-6 months, maybe 3-4 months, depending on if it's expedited. So in terms of like the effect on the market, this is probably like a very delayed thing. So I wouldn't necessarily put in or price in the risk of BTC unlocks yet, because we just don't know when they're going to be occurring, and you can't like make a future plan based on an unknown date. It just doesn't make sense. So for me, I'm not panicking. I'm actually viewing this as a net positive, because I mean, a Bitcoin spot ETF is what we've wanted for so long, and that's going to give more people access to Bitcoin. Like it or not, I think it's a net positive, because it's going to give, like, let's say you're a retail person, you invest in stocks, maybe you're a retirement fund, you invest in stocks, you don't want to like open a Binance account for your clients. You're now going to be able to just buy Bitcoin through like a stock market exchange. It's also going to mean institutions can now hold it on their balance sheet much easier. It can all be aggregated under one interface, like a portal that allows you to view all your assets, just much easier than having to buy it on an exchange and track it separately. So I think there's just that slight more enticement when you have a Bitcoin spot ETF for like, bigger companies and also retail that's maybe like a little bit unfamiliar with crypto to start investing in crypto. And the other thing is, with a lot of these on-ramps and off-ramps currently under scrutiny by the SEC, it's going to now give investors the opportunity to invest in Bitcoin that maybe are going to be cut off from certain on-ramps if you're with a certain bank, or if you don't have access to a certain exchange. That is like a potential massive headwind for crypto as a whole. But having a spot ETF for Bitcoin is going to be very good for those people that can actually get access to Bitcoin more easily. And also a spot Bitcoin ETF leads into a potential Ethereum ETF. And that's going to take a lot longer, because Ethereum still has somewhat of like a security concern, at least around like Ethereum staking and all that sort of stuff. Let's just see what happens. I don't think it's a security, but let's just see what happens with the SEC's declaration of ETH. But if Bitcoin does get a green tick here, then I think the chance of an ETH spot ETF definitely starts increasing, and that obviously is great for altcoins. So overall, a net positive, despite maybe some unlocks happening on the GBTC side as people kind of start to redeem stuff. And just the one more big like macro SEC update before we get into the charts is the Ripple case. So we had some pretty big news out of the Ripple case. Yesterday's opinion from the court on Ripple and SEC proposed this opinion. So this is essentially the TLDR. Specifically, not only is the SEC's expert on reasonable expectations of an XRP purchaser, but so is their expert who tried to see what caused the price of XRP to change. On the flip side, our experts that explain how Ripple's contracts clearly differ from those in the 𝗟𝗄𝗽, tax treatment of XRP, accounting treatment of XRP, and currency expert XRP are all allowed to stay in. As we have said throughout, we have always felt confident about our case, and with each ruling, even more so. So obviously that's from Stuart, the legal representative over at Ripple. So I do think this has like slightly increased Ripple's chances of winning the case. It's coming to a bit of a head here. I think over the next couple of months, this could potentially be resolved, or at least like we get a final verdict. Ripple winning would be amazing for the space because it kind of does set a precedent for similar ICOs / token launches at the time. So Ripple winning is a net positive. Ripple losing is like a net negative. So any positive news we get out of the Ripple case from Ripple's side, I'm siding with. Like, irrespective of what you think of Ripple, whether you love it, hate it, we can't really deny that it is good for the crypto space if they do win the case. Let's keep our eyes on this, but good developments happening over there. And one more thing before we get into all the fun stuff and discuss charting. If you do want to sign up for an OKX account, they're our official exchange sponsor on the show, or centralized exchange sponsor. There's a link in the description, and you can get yourself a $10,000 mystery box if you use the link and sign up with 2 simple steps. Basically, you need to sign up, deposit $50 worth of fiat or spot, and you can claim a mystery box. Now, obviously, it says 10,000 here, but it might not be 10,000. It might be $5, $10, $20. It can really be whatever, but with the potential to win 10,000. And there's some cool stuff coming on OKX. I don't want to spoil anything necessarily, but there is some very cool stuff coming. So if you do want to sign up, I think now's a good time. I'll save that stuff for next week, but now would be a decent time in my opinion. So, and of course, like we got links in the description to OKX as well as our other exchanges. BitGet for the 8K bonus, and Bybit for the 30K deposit bonus as well. So I want to introduce a guest now in a second. His name's RunnerXBT. He's a fantastic trader. I've been following his trades on Twitter for quite some time, and then recently I saw that he launched a YouTube channel, which I've recently started following, and also has a podcast with another pretty well-renowned trader in the space. So I wanted to bring him on the show for the first time. He hasn't done that much live stuff before, but he shares a lot of alpha on Twitter, and I thought he could offer some really good insight into the current state of the market. So Runner, welcome to the show, bro.
Hello, guys. Thanks for having me.
Thanks for joining us. It's really good to have you here. And as I said, you've been putting out great content on Twitter, and I think it's like a great time now with the market pretty uncertain to actually have you on and maybe give a little bit of clarity over where we sit and what your plans are.
Okay, I guess maybe like a quick intro into my trading style. I mostly trade lower time frames. I think that's very important when maybe the viewers are following newer accounts. They need to kind of recognize or have an idea which timeframes these people trade, because let's say if you like to trade swing trades, right? If you like to trade higher timeframes, monthly, weekly charts, and then you're following someone like me who trades 5 minute, 1 minute, or 1 hour chart, then the trade can play out. So I'm mostly lower time frame trader. I trade mostly altcoins and narratives, and I do use a bit of something called orderflow trading, which is like a nice addition to technical analysis and price action.
Could you explain a little bit more like what order flow trading is and like exactly how you operate in that style?
Can you guys see my screen? Just want to make sure. Might be a bit easier.
You're all good.
Yeah, so for order flow, I'm gonna put this on full screen. This is an app website called CoinGecko. It's completely free, so this is not like a sponsored shield. I use it every single day. It's an app that, as you can recognize, is very similar to TradingView in terms of like user experience, user interface. Obviously the TradingView chart here, but Orderflow allows you to basically see something we call passive and active flow. When passive flow is your limit orders and resting liquidity. So as you guys know, when you're trading on Exchanges, you have something when you buy or sell your crypto spot or futures. There is a difference between market and limit orders, right? You either taker or maker. So passive flow, again, is like resting orders, meaning limit orders. And active flow is the market orders, because how order books work. If all of us were just using limit orders, like let's assume everyone in the market, I know this is impossible, but just for this example, everybody was just using limit orders, the price would never move, right? If price is moving up or down, that means there's more buyers than sellers. It's technically a bit more complicated, but I want to keep it very simple, right? Basically, you have people market buying against limit orders. So if there's more market buying, then there's a resting liquidity above, the price will move up or down. So yeah, order flow allows you to see this information, what type of information, a part of price and volume, which you guys are familiar with. You get liquidations, you see open interest, and something called CVDs, which is cumulative volume delta, which is different between all market buys and market sells. Let me know, Miles, how in depth I should go. I've made a very in depth, slower description about this, which like tutorial. I could speak about the technical side for hours. I think it's like to keep it kind of simple.
We'll keep it fairly light. Talk about charts today, but if you guys do want like more like in-depth explanations behind like order flow trading narratives and stuff, he does have a YouTube channel. There's a link in the description to his YouTube and Twitter. So I recommend like you give him a follow. He just started with the YouTube, but Twitter's been going strong as well. So yeah, give him a follow if you want more stuff like that. I think today we'll kind of maybe keep it a bit more like lighter, but I think it's a good intro to order flow trading. I wanted to get your opinion on Bitcoin right now. I think that's like the logical place to start because
sure.
the biggest coin, it drives a lot of market movement. What are you currently seeing at the moment? Bullish, bearish? What's kind of your outlook?
Maybe let me actually do like a very quick analysis. So here I have a monthly chart, which is my favorite higher time frame to begin with. From simple support and resistance levels, I would put like a resistance here, right, at around 23,300. And sadly, even though we had like a nice monthly candle in January and February, last month we managed to close back like below the previous high. So technically still in a range. If we go to weekly, the same thing. I actually have a level here already. We closed just under the weekly resistance. So for me, it's also still in a range. So I can see market doing. I just got to pinpoint that. Like I think you had a very good introduction before me. Like you said, there's a lot of uncertainty in the market given the regulatory issues. That's very crypto specific, but also macro related stuff. I'm sure your regular viewers can agree that we have macro basically all the time, but I do believe that this month is like specifically packed. But yeah, I would not be surprised. I'm sorry, this might make some people angry, but I would not be surprised if we just range, for foreseeable future. That's I guess my forecast, because we're still technically in a range since last summer. Was August. And we were not able to break out. So for that reason, we are technically still in a range. I know this is not a very accurate level, but to give an idea, I think that's more than enough. I do consider this big sellout, which was an FTX scandal. I do believe this was, from technical analysis perspective, this was a deviation. And I believe we're still in this range as I have marked out the box, basically.
So how do you even trade? How do you begin to trade a range like this? Like, do you how do you work out like intro range, like what the levels are where you might be interested in shorting, longing?
So for me, let's say I have this, if I have this box, I do basically I plan my trade on altcoins based on Bitcoin. I'm usually not trading altcoins that much if we have so much volatility on Bitcoin. Like if I go to 4-hour chart, right, this is quite a lot of volatility on Bitcoin, in my opinion. So obviously, if we have this price action on Bitcoin, what happens to altcoins, right? I can just show you my watch list. By the way, I think this is a nice free tool I can recommend. I was thinking what free alpha I guess I can contribute and show you guys is that there is a website also completely free called Sandwich Finance. So if you guys are using TradingView, you can download all the pairs that the exchange is offering. It includes several exchanges, including OKX, which is a sponsor of the show, if I'm not mistaken. So you can just download it as a file and then upload it to your TradingView, and you can basically then filter all the symbols for best gainers basically and biggest losers. In my time zone, which is 2 a.m. right now, we just had a daily close, or like technically these values are recent, but just like before we started the stream, most of the altcoins were down like above 10%, right? So Bitcoin was flat, down 1%, but altcoins were bleeding 5 to 10%, which is not an ideal scenario for me. So for example, last few days, I've been just sitting out, waiting for Bitcoin to calm down and look for altcoins that are showing relative strength. So to like put this in perspective, which altcoins are doing relatively well, these are the coins doing the best last few minutes and hours. I like that XRP was mentioned. I'm definitely not an XRP maxi or someone who believes that we will see XRP go to $589 or whatever the ridiculous price target was. But nobody can dispute that XRP has been showing relative strength last few days. If you want to be more precise, you can put instead of XRP USDT, we can use Bitcoin pair. And yeah, I mean, it's quite obvious that XRP is basically outperforming Bitcoin. I believe a lot of it is fueled by the SEC headlines, and yeah, but
would you consider a long on XRP at some point? Like, is there a level where like you're interested in longing, or?
I mean, from technical perspective, I think you kind of have to, right? Like, you don't have to long, but if me as a trader, if I should be looking to long strong altcoins, then I should be definitely considering XRP. Oh, from level perspective, let me see. Like, for me, I would go on, if I may show what I would do in Coinalyze, because that's my bread and butter. So I would go on Coinalyze. You click on markets. Here is a coin. So we are looking for XRP. I'm going to look for pair on Binance because that's where I trade and does most volume here. And what I do, as I said, I trade mostly lower timeframes. So I'm looking for big relative liquidation candles. I know this might be a bit difficult, but I just really want to show what is actually something I do in my day trading instead of trying to look for levels on, let's say, higher timeframes. So this bar right here, I'll make it a bit bigger so it's easier to see. These are liquidations. So the big green candles in this chart are big short liquidations, and the red candles, on the contrary, are long liquidations. It might be misleading at first, but it is how it is the fact, basically. I'm gonna zoom out a bit. I'm basically, what I would be trading is, I think this is a decent example. You often see a mean reversion or like a bounce in simpler terms following like a big liquidation on the long side here, right? So price went down. People who were long and over leveraged, they got liquidated. We see that in liquidations, and the market proceeded to bounce. I know this move might be a small one, like a 2%, or that I would have to buy perfect bottom, like maybe like 1% realistically, but that's type of trading I do. Like, I just sit at a chart that's doing well, and I'm scalping liquidations pretty much. So I hope that answered your question a little bit.
Yeah. So how would you identify like if like a project is like lining up for like a liquidation scalp? What's like your signal to maybe go long?
That's a very good question. Actually, I prepared a couple tools. And by the way, for the viewers, we're not like staged with Miles. He actually asked like a legit awesome question. So as we all know, there's so many pairs in crypto, right? There's so much stuff happening. Like you would have to have like 15 hours a day every single day to be able to catch up with like half of the stuff that's really happening in crypto. So unless you have like group chats, friends and alpha groups, it's really hard to keep up with everything, with every single narrative and rotation. I can recommend a page. Again, it's completely free. You don't need to sign up, no nothing. It's called Laevitas, and they have a derivative dashboard like this. This might look a bit overwhelming. Don't worry. In terms of order flow trading, I do look at something called open interest. Open interest, in very simple terms, is how much leverage entered the system. So this is open interest change in last 24 hours, right? So the open interest today compared to open interest yesterday. So for example, you can then also filter them, and for example, KAVA. Quite frankly, I don't know what the project does, but for me as a day trader, it doesn't really matter. I just see, okay, it's on Binance. That's for me important. As I'm trading there, it has a lot of change in open interest, meaning there's people speculating. They're doing something. They know something that I don't know. So then I would, let's say pick top three altcoins, and I would look, why they're moving. So for Shiba, maybe some of the viewers know, they had some more announcements and like news coming for the Shibarium, which also affected Bone, if you like higher beta or higher risk altcoins. But that's basically how I go about it. I pick altcoins. I personally like to look what's happening because I have the luxury of having the time to study what is actually happening. But basically then I would see, okay, KAVA, I would go back to my CoinAlyze. I would look for KAVA, and
KAVA
basically
also had, I think, like there's always fundamental drivers behind a lot of this stuff. So you said Shibarium for SHIB, which I showed on screen. For KAVA, there was a huge development grant, which is like incentivizing new development. So a lot of developers are now going to KAVA, and then I think like some of the pools on the network are very juicy as well. So like people need to hold the token in LPs to earn
nice.
yield. So like there's a couple catalysts as well for KAVA.
Oh, perfect. Look, this is actually a super easy example of what I was showing before. So remember, I said like relatively high liquidation, right? The big green candle. If we look
The
to the
green's
left,
liquidation and red is
also
the opposite.
liquidations, but
Oh,
the
okay.
green ones, the green liquidations, they are short liquidations.
Okay. So short's green, long's red.
Yes, but
Okay.
this is just, you can change the colors, by the way. So if
Yeah,
it's showing different for you, I want to pinpoint one thing that I think can be a big takeaway for people watching. Think about it. What does it mean if I'm short and I'm liquidated? It is technically I'm forced to buy. So that's why when we see a short liquidation, you see this a lot. This looks like, if you don't have the order flow data, you're like, wow, that's a lot of buying, right? Look, price moved up like whatever, 4%, 4% in 5 minutes. Wow, like, wow, someone is buying. When in fact, it's just people getting liquidated on their shorts. And then you see price retrace the move, which was like, I don't know, 2.5, 3% move, my guess, 3.5. So yeah, my thought process is go to Laevitas, pick a coin that's is high, basically get high probability of giving me these scalps. And then, as you see, I think I'm very glad that this is actually such a nice and easy example. So yeah, this is how I trade in 10 minutes.
No, I think it's awesome. I think it's super cool insight and a unique strategy. I might actually start using that website. Would you say it's called Laevitas?
Yeah, Laevitas. Again, it's free and I'm not sponsored. I just want to make sure. Actually, my friend, my colleague, if I may shill very quickly, who am I doing our show with? Adam. He showed me Laevitas, so shout out to him.
By the way, your musical chairs show, which I think is every Monday, right?
Yes, we'll do it every Monday.
Yeah,
correct.
that's in the description. So if anyone wants to go check that out, it's like a long form, like weekly trading style show. So I wanted to ask you, like, obviously, like not financial advice. Any like altcoins you're looking at right now that have interesting setups, or like any trades you're currently looking at taking?
Yeah, I like XRP. Honestly, should do more research in terms of like levels and places where I'm interested to do business. But I given like you mentioned this in your videos as well, or in your content, there has been a lot of FUD around Binance, right? And their BUSD
Mm.
stablecoin, which was like the official stablecoin of Binance. I mean, it literally has it in their name. And so people are speculating on other projects that have something to do with stablecoins, right? So Maker is related to DAI. We have projects like True and LQTY. And interestingly enough, LQTY is like fundamentally, I don't have that much knowledge, but I know they do have their own stablecoin called LUSD, and Binance just recently listed them in their innovation zone. So if you guys are following Binance announcements for some time, they've listed recently coins like GMX, GNS, Magic. So those are like Arbitrum tokens, Arbitrum ecosystem. But they, again, maybe 2 weeks ago now, they listed this token, and they already had a TrueFi before, but they just listed perpetual futures for the coin. So in my head, how I'm thinking about this potential narrative is that Binance is clearly having issue with regulators. Unfortunately, there and we have CZ Binance repeatedly tweeting number 4, which is becoming a bit of a
Yeah.
meme, but I still find it funny. But I do believe, and again, not financial advice. I have no clue. But I expect something more from these two coins in terms of announcements. I don't know what it is, what it will be, in what form, but I do expect Binance to basically push for other stablecoin projects to diversify from BUSD and basically give traders, give investors other venues to safely trade.
Okay.
So,
So what are
yeah.
those coins? You got LQTY, TRU.
Yeah. Like look. I'm. It's not only me thinking that, because if you look at the chart,
Uh,
right, it's up quite a lot. And this is actually funny. This is where I marked the area. This was the actual Binance listing. So we can see that the price moved up quite a bit. To give you percentage terms, yeah, it did like 2x already just before the listing. So if you guys like to speculate, you might think maybe someone knew and was accumulating beforehand. I don't know. I wish I knew. I didn't know it beforehand. I was just buying later, but yeah, that's the game we play.
is that something you'd look to buy at support at like one? I see your support. There's like 1.45.
Well, for me, this area is like a pre-Binance listing area, so that's becoming interesting, I guess. I guess from technical perspective, could be like a support, right?
Mm.
But I mean, for me, I'm greedy. The lower, the better. So
Which
if
is
I get
good.
a
You
nice,
need to be picky in this market so you
yeah,
don't
yeah.
FOMO.
I mean, you've said it very well, and we've discussed it from different shapes, different angles. Market right now is very like uncertain. How will small market cap, very illiquid altcoin do if, let's say, we get some sort of super bad news, bad headlines? I think there is no shame in just staying in stablecoins and just waiting it out. It's You cannot go broke, just waiting. So, and I truly believe, if there's like one takeaway that people watching can take away from my appearance here, is that having no position is also a position.
Yeah.
And I think it's a healthy way to look at, I guess people call it risk management.
Is there like a bias you have for Bitcoin in like the next couple of weeks? Obviously, we've got CPI on Tuesday. We have FOMC later in the month. Is there like some scenario you think is based on the technicals more likely or not to play out?
Yeah, I would love Bitcoin to hold. This is just my wishful thinking. I think a lot of people are watching this area. So this is this pre-breakdown cluster. This was the FTX saga. So anywhere between like 20.8, I guess. I believe a lot of people are watching around there. Obviously, like few dollars here and there, to me, does not matter. But if we just look at this chart, it might get filled, as you mentioned. But again, it's all very relative. Let's see what happens to traditional markets.
Yeah. And on the shorter time frame, or are you more just looking at Bitcoin from like the daily at
Yeah,
the
yeah. On
moment?
Bitcoin, I mostly try to look at higher time frames, but for my altcoins, as I've shown before, it's mostly like 1 and 5 minute chart for me.
Yeah.
Yeah, but on lower time frames, I mean, this is just ugly. I wish I could have some more optimistic and like encouraging words, but this is just I mean, for transparency, I shorted ETH much higher, and I've started like hedging the position by buying a bit Bitcoin, but very little for now. I'm a buyer at this area, and with very like defined refined risk management, meaning stop loss. So I guess I really don't want to like publicly share stop losses. It's something I would not advise people do. But these stop losses in this setup are pretty, I guess, pretty obvious.
Yeah.
Because people could, I'm not gonna share mine exactly, but people can be. I know a lot of people will have stops below these wicks, so I would not be surprised. You know how crypto is. If we just wick and then spring back up.
Yeah. Yeah, that sometimes happens. Liquidate the liquidate all the longs and then back up resumption.
Correct.
Which sometimes happens. What do you think about like the possibility of like in the shorter term, like seeing like a push up into the 22 like 4 range, or would you just not be trading CPI like ahead of Tuesday?
That's a tough one, right? Because
you don't have to make a call. I'm just interested to see like what your feel is like pre-CPI.
Yeah. I mean, I highly recommend people to journal these events actually, because we get CPI every month, right? So you can. What I do is like literally journal like every 5 minutes. So in my time zone, it's like 2 p.m. 30. That's literally when the time comes out. So I like measure what happens, like if the number is higher or lower, because very often you have a price reaction at the CPI print, but technically New York Stock Exchange opens 1 hour later, right? So usually you can get like a move to either direction, and then during the open, you get another like basically, how would you call it? Like maybe like a sharp move. So I personally agree with you on like lower timeframes that we get a bounce. That's why I started buying a bit, because as you've shown the predictions and market pricing in the rate hikes, very simple questions. What happens to risk assets if we get 25, right?
I think 22.5 for sure, but probably like 23. I think there's a huge zone between 20, at least on my chart, between 20, and our charts might be a bit different. Between 23 and like 23.5, like this area, this like yellow box around the 200 MA on the 4 hourly, this previous zone. That's something I'm looking at. Like if we get a 25, that's like an obvious zone for us to go retest. Maybe we get rejected there, but like for sure.
Oh yeah, I mean, if we go there, I'm already out of my longs. So yeah, that would be
I would cut longs there as well.
That would be a nice few percent. The market is, let's be honest here, it's not a bull run. We just had a nice dead cat bounce or eco bubble, whatever you want to call it. I'm afraid like the juice, we squeezed the juice already, and now it's.
Let me show you something depressing, which maybe explains the echo bubble. It's this this if you overlay the Bitcoin chart over the Wall Street cheat sheet, it's this little area. Do you think this? do you think?
Oh no!
Yeah. It looks terrible when you look at it like that.
No, please, take that off my screen. That's not a no.
It's a bit Look, I think I have my issues with these cheat sheets. The first thing is like you can line it up however you want. You can manipulate it, so it's like a bit like, yeah, I don't think it's necessarily like gospel, but it's just interesting. I think that it's like lining up.
Just imagine the emotions, right? People watching the videos, people on social media. This scenario would make us all lose our minds and go insane.
Yeah, that's. I think if we line this up with the actual chart, it's like a 600 bill total crypto market cap, which is like a 30% pullback. So that's probably like Bitcoin. This is probably like 15K again, like as a rough off the top of my head guess, which is like, to be honest, pretty in line with like most estimates, which is generally like, yeah, the FTX bottom is like around what the bottom for this cycle will be. I'm not going to call a bottom because honestly, it's all probabilities. Like you can't make an absolute prediction on the bottom, whether it's in or not. But like that would be roughly that level.
Yeah,
So
I like. Of course, we can get like a new black swan. I guess. Hopefully not Binance. If
yeah,
I,
or
I
Tether. I think Binance and Tether are like the
yeah,
two.
yeah, that probably sends us to new lows. But let's
I
not.
don't think so though. I mean, yeah, it's all just opinion based. But yeah, I don't know. I think they're going to continue to see SEC scrutiny. They're going to be in the news a lot. Like, there's definitely no doubt there's going to be news, but whether like that actually results in like a material impact on Binance, that's something we have to weigh up. Like, maybe they get sanctioned, but I don't know. It's like really just speculation, and not. I don't really want to trade like based on FUD. So,
Yeah, yeah, you're right.
but,
You're right.
but we'll see. We'll see what happens. So, is there anything else before we head off? Because I'll probably have you again on in the future, and we can update
I
once
think
there's
I think I
more movement.
covered quite a bit. I'm sorry if I
Yeah.
spoke too fast. I'm sure that was a bit might have been a bit overwhelming, but I think that was a nice little intro.
If you need, well, I speak really fast, so if I think the viewers are like acclimatized to like fast paced speaking, so by the time you came on, you probably seemed
Oh,
relatively
perfect.
normal. Because especially sometimes people tell me they watch my shows on like 0.75x. They need to
That's
watch
fine.
it slower because I speak too quick. But yeah. No, I think it was great. I think it's good insight, and I think someone asked what the site's called. The first one, so there's Laevitas, and then there's
Yeah. Laevitas. I'm gonna show them here.
and there's Coinalyze.
Yes, Coinalyze, correct.
And then you've also got that other cool one. I'm actually going to use that tip for the Trading View watch lists.
Yeah, that's Sandwich
Cool one.
Finance.
That's really, really cool. I'm actually going to do that because I didn't realize that existed. So we can import
Yeah,
the
I'm just
market.
trying to, I was thinking how I can save people some time. Because if there's just to be time efficient, time is everything in this market.
Yeah, for
But
sure.
also maybe like a third option, if I may, like on CoinGecko, you can have gainers and losers. So you can filter everything you want. I usually just go for top 300 projects because if you go for top 1000, you will end up seeing like a lot of super small caps, and that can be
Mm.
noisy. So maybe I do look at stuff like this: what is doing well, what is doing not so well, and yeah,
And this
just
is actually super important for people. Actually, like, it looks so basic looking at the gainers and losers, but this is a filtration method. So you guys, you've got to use these tools to like open interest tools, price movement tools, to like filter what's doing well and what's doing badly, because then you can look further into it. So you might see CFX is up 200%, Y is up 200%, dig deeper, like Stacks is up 100%, why? And then that might lead you to like a narrative and more coins that haven't run and give you opportunities. So it's really just about like in terms of your research method, having these sites that can help you like filter information, because you're going to be able to spot things. If something moves 100%, you're going to be able to go, oh, this might be interesting, there might be a trade here. So it's like, yeah, it's all just about filtering to find like new opportunities. It's like the essence of this stuff.
agree. And it also gives you like a signal where the attention is, right? We're still like hopefully not the cheat sheet stage, but we
Yeah,
still don't have that much new
I'm gonna
capital
get this off
really.
my screen. Delete.
Yeah, like we don't have that much new capital flowing into the market, so you really probably want to be looking at stuff that people are speculating if you're looking to day trade. If you're looking to invest, obviously that's not my field. But if I'm day trading, I want to be looking. I want to see where the attention is, basically, in simple terms.
Yeah, yeah. Well, I think it was a great intro. Remember, if you want to follow Runner on his socials, I'm just going to get them up here. There's a link in the description. He has a great Twitter, also has the YouTube and his like weekly podcast slash like trading long form trading show every Monday with who Abe as well joins you
Yeah,
on
Adam,
that one.
Adam
So
Ape Trade, correct?
Ape. Sorry, I said Abe. Ape.
Ape, yeah, he's an ape.
Yeah. He's an ape. So if you want to watch some ape into stuff, you can go watch. You can go watch that. But yeah, I recommend check him out. Link in the description for all that. And yeah, thanks so much for joining the show today. I'll hopefully have you on again in the future.
It would be my pleasure. Thanks for having me.
Awesome, bro. Well, I just want to go answer maybe a couple questions now while the show's still running. We'll just do a couple more minutes. While you guys ask any questions, before we wrap things up, I want to remind you, if you do want to trade any of the setups we discussed, or just in general, we have OKX, which has the $10,000 mystery box. We also have obviously BitGet. I'm sure most of you guys are over there, but if you're not, there's pretty nice bonuses there. You've got 30k on Bybit, 8k on BitGet. Also, there's GTrade as well. If you're more of a DEX trader and you don't want to necessarily use, leverage exchanges on centralized parties, then you can also, or if you just want to diversify risk a little bit, one easy way to do that would be on like GTrade. They're on Arbitrum and Polygon as well. So there are a few options for you guys in the description. And yeah, if you, I saw, is that Zach's cousin? I don't think so. It could be though. That guy was cool. Yeah, he knows his stuff for sure. I think it's a unique perspective. So cool little tips for you guys as well. I'm actually going to use a couple of them in my own training. Great stuff. Glad you liked it, Roberto. Also, like if you want to do like non-leverage swapping, you can do so on KyberSwap. Just as a reminder, because I know not all of you want to trade like leverage. Some of you just prefer to trade spot, which is totally valid. Some of you are more long-term traders. KyberSwap will give you the best rates across most altcoin trading pairs for like basically on every EVM network, plus like Solana and like Velas and all that kind of stuff as well. So it's that's basically my one-stop shop for like DEX spot trading. So yeah, basically like one more thing I wanted to show you. I'm sick of all this bearish. I don't know why I have so much bearish stuff. I'm generally not trying to freak anyone out. Like we've already gone through our setups. We know the levels where we could bounce. We also know short-term bounce definitely could happen. All that sort of stuff. But if you do want some more bearish news, not that you do, but if you do, then I don't know. I just thought this was interesting, like how we saw like 2008 before like the major recession. We had like a bit of a bear market rally, like deviation above trend, break down, and also we've kind of seen a similar thing in 2023. But like there's a good thread by Game of Trades. If you want to have a read, if you're a real bear and you want some bear hopium or something like that, then you can look through this thread, and he kind of outlines how like similar drops in the S&P have all shown to end up in some pretty nasty moves before like a strong recovery. So I just think it's an interesting thing to look at, that every single major bear market rally since 1960 had some sort of fake out at some point. So let's just keep our eye on it. Obviously, we haven't fully faked out yet, though. That's like another thing to note. If we actually look at the S&P and draw in this trend, so we could see the trends on like a 1 week, then we could see that technically we haven't broken down below too sharply yet. Like we can see, we're actually still above. So yeah, but although the S&P is still looking relatively like shaky, we did break below like a major horizontal level. Kind of expecting now a pullback to 39. I'd say 4K for the SPY or S&P index is like the number one like zone. It needs to hold probably on like the higher time frames as well, like daily, weekly charts. Daily, we could see we just broke below. Weirdly, Bitcoin actually showed relative weakness. It was like positively moving versus like stocks and bonds, but we actually did see like slight decorrelation over the last couple days, and Bitcoin actually sold off more so. But anyway, hope you guys enjoyed the show. I think it was super alpha packed. I'm gonna see you tomorrow, which will hopefully contain just as much alpha. Don't know how we're gonna back it up after Runner, but I think I can pull something out for tomorrow. So I will see you then, and yeah, also have some cool content dropping on the weekend, trading strategies, that kind of stuff. So till tomorrow, hope you have a lovely day, and I'll see you on the other side. Peace out.